heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde of Bloomberg's world headquarters in New York.
And I'm Ed Ludlow, not in San Francisco, side by side for the last time this week. And this is Bloomberg Technology.
Coming up, look, Microsoft poised to clear its final hurdle for its $69 billion takeover of Activision Blizzard. We'll dig in.
And the UAW expands its strike against GM and Stellantis as talks progress with Ford. We'll give you those latest details.
Plus, iPhone 15 hits the shelves around the world today. We'll get the read on the state of demand for Apple's new products. But first, let's check in on these markets. And if you weren't standing in line over by Central Park in New York City, maybe you're eyeing up what's happening in terms of the mood music turning to the green side. Just ahead of the weekend, we get a little bout of buying. We had upwards of 1 percentage point move on the Nasdaq earlier. We're now just up 0.6%. We saw the S&P 500 after 3 days of really quite torrid selling, managing to bounce off of what had started to become some technically oversold markers. Now, we're seeing a bit of buying on the debt market at the moment. We're seeing 5 basis points, 6 basis points to the downside on the 10-year after we'd hit, well, close to a 10-year high in terms of the 10-year yield. We are overall, though, seeing what is a little bit of tentative purchasing in Bitcoin as well. Look, only 0.1%. I put it on there because it's small amounts. But really, what's driving this mood? Is it because some of the data actually looked, well, worse than usual in the US and actually some slowing in terms of business spending overall, in some of the data points showing that maybe the Fed doesn't have to hike so much? Or is it what's happening with US-China? Is there a thawing in relations? Are we starting to see these meetings that the US Treasury Department has just told us about between some senior level government officials in China and the US? Will that help the relationship? Certainly K-Web, some of those internet-related names traded here in the US, in China currently up 3.6%. But Ed, what are you doing on the micro?
Yeah, a lot of news, some of it here in town. Tim Cook here for the launch of the iPhone 15 that's gone on sale. Apple up 1.4%. Whether it's in direct reaction to that or not, we will discuss later in the program with Bloomberg's Mark Gurman. The other big piece of breaking news this morning has been the UAW is expanding its strike against GM and Stellantis, but not against Ford. You see Ford shares up 2.5%. GM flat, Stellantis actually higher, despite that continuing stalemate, essentially, between the unions and those automakers that are transitioning to EV. There is concern long-term about jobs. The other big story of the day is coming out of the United Kingdom. The UK Competition and Markets Authority has essentially greenlit now Microsoft's $69 billion purchase of Activision. They've looked at the compromise, which is to sell cloud gaming streaming rights to Ubisoft, the Paris or French-based video developer. Earlier on Bloomberg Television, we had the UK CMA CEO on to react to that decision. Have a listen.
The content creation remains with Activision, but the ability for Ubisoft now to take independent decisions about how that content is then distributed through third parties. So we know sort of previously Microsoft could control and limit the distribution channels, for example. That doesn't happen now. That's all within the unilateral control of Ubisoft.
CMA CEO there. Now let's dig into, well, the ongoing narrative of this story. Mark Bergen is standing by in London. And, I mean, we still got months to go until it's formally greenlit. But you think we can read the tea leaves that this is going to be good to go?
I think my impression is that Microsoft hopes by October 18th, so that's even, is that less than a month? But, you know, these things, as always, are up in the air, and the regulatory environment, and certainly in the UK and Europe, can be a little bit more unpredictable when it comes to tech.
You know, Mark, at the beginning of the summer, I don't think anyone thought this deal was going to go through, and they overcame the regulatory hurdles here in the United States. Now the UK CMA was the final hurdle. What was the CMA's argument or commentary on why they felt Ubisoft was a good enough compromise?
I think this is a really interesting concession, and from my understanding, it's like they're basically looking for a third party that's not Microsoft here that can be making these decisions around cloud gaming. If you buy the Microsoft thesis, and certainly like other companies like Google have tried and probably will continue to try in this world of cloud gaming, giving Microsoft, it feels like giving Microsoft control of that. If you if you have Ubisoft involved, then you have this third-party company, a French company, that can sort of deny the ability for Microsoft to manipulate the market.
Microsoft, Brad Smith in particular, comes out saying that they're still going to be working towards this October the 18th deadline, as you point out, Mark. But what a different environment. I mean, this has been a year and a half since they first wanted to get this $95 a share deal done. What's changed? I mean, is still the business basis remaining the same? Is it still all about mobile gaming?
My impression, there's a armchair political analysis here, which is that the CMA was sort of the only organization that the U.S. And even the EU, which is typically sort of much more willing to block these sort of deals, gave the green light. What's happening here in 2 months in London is the Prime Minister is holding this big summit around AI, this focus on AI safety, but also trying to build out the UK as a home to innovation and industry. I think it was certainly seen the messaging from Microsoft is that if the CMA blocks this deal, that is very counterproductive to the ultimate aims. And so that probably was maybe one of the factors in this redirection here. And I'm sure we've done my colleagues have done some excellent reporting on what went on behind the scenes here. We saw this morning that I think the Activision price is now back to where it would have been initially paid, which just means a lot of lawyers made a lot of money in the past year and a half.
Don't they always? Mark Bergen, thank you very much indeed. Go have a good Friday night. Meanwhile, let's talk about what's happening elsewhere in terms of relationships between private and public. UAW expanding its strike against Stellantis and GM, as Ed was just saying. Look, the UN union, in fact, has announced that it's made some real progress with Ford in talks over a new labour contract. For more, let's bring in Bloomberg's Gabrielle Coppola. And Gabby, we try and put the tech lens on this, and you did it so expertly last time, just shining a light on how much EV transition is an issue for these car makers. What do you think is at the heart of why Ford's making progress here?
Well, I think Ford traditionally has had a better relationship with the UAW than GM or Stellantis. The company has said they spend about $1 billion more on labor than GM or Stellantis, and I think a big part of that is they have fewer temporary workers. And that is a key difference because there is basically a second class of workers in America's auto plants. And that is these temp workers who, they start out at about $15.78, $16 an hour, and they top out at 20. Whereas if you are a full-time worker, you start out at around $18 and you can top out at $32. So in some ways, Ford was already there, but they are still making significant concessions. They agreed to cost of living allowances, basically inflation protection for the workers. That's something that went away in 2009 when GM and Chrysler went bankrupt. Ford agreed to put it back. That was a major thing for the union. And also another key thing is the union, Sean Fain, the UAW president, said for the first time in history, the union has won the right to strike over plant closures during the course of the 4-year contract. Now, that's a big deal because if you think about the EV transition and the push for, lower cost and lower labor costs, there's been a lot of new auto plants, coming up in Mexico. All three of these companies are making electric cars in Mexico, at least some of them. The Mustang Mach is made in Mexico. Ram has some of their, delivery vans, electric, being made in Mexico. So, the UAW, I think, sees the writing on the wall, and they are really pushing hard to stop that. And with Ford, they've made some progress. I don't know if they're going to be able to pull that off with GM or Stellantis, but Ford is certainly hoping so.
Gabby, Sean Fain's kind of big picture argument has been billions of dollars from the Inflation Reduction Act is going into the infrastructure. The companies can take that. And he's basically saying, like, the labor has to go with it. You have to take some of that money and invest in the workforce long term. My question is, like, net, do EVs require the same number of jobs on the assembly line as a combustion engine car does?
Well, there's been studies that suggest that no, they do require fewer workers, especially when you think about you no longer need to make engines, or some of the transmission that you would see in a combustion engine. But I would argue that we still don't have a really clear picture on that. It's still early days in this, and there are new jobs coming up. Look at the billions of dollars in investment, the companies are making to build battery plants in the United States. I think GM has talked about they're actually bringing more of some of their kind of powertrain work in-house so they can have a place for union workers to go to in the EV transition. Stellantis has talked about that as well. The question is, what kind of jobs will those EV jobs be? And that question is crucial to the UAW members. It's crucial also to our national politics. And, you saw that, former President Donald Trump is coming to Detroit next week. This morning, Sean Fain officially invited President Biden to come visit the picket line. So whether or not these future EV jobs are good jobs is critical, not just to the UAW and, these workers' standard of living, but also it's going to be a huge issue in our, presidential election for the whole coming year. It's just a huge topic.
Bloomberg's Gabby Coppola out there in Detroit. Just so good to have you here on Bloomberg Technology, bringing us the breaking news. Coming up on the show, we're going to talk about the broader health of the tech sector with Denise Chisholm of Fidelity. Oh, I love having Denise on the show. This is Bloomberg Technology.
What a week, whether you're looking at the Fed, whether you're looking at the UN, whether you're looking at IPO windows, but notably also whether you're looking at money being drawn out of the stock market. We're seeing the S&P 500 having the most amount of funds come out since we understand in December. That's according to Bank of America Merrill Lynch. But let's dig into whether that's really coming out of the tech sector, whether it should be. Denise Chisholm is with us. She's Fidelity Head of Sector Strategy. Denise, great to have some time with you. And I'm just interested as to when we've seen quite a hard sell-off in the last 3 days. Today we steady a little bit. What do you make of these valuations? What do you make of a NASDAQ that basically was almost at oversold territory? You're down at almost 30.
Yeah, when you look back at the short-term volatility we're seeing now isn't exactly a surprise given the really strong rotation we've seen in the overall market and then obviously in economically sensitive sectors like technology. So a little bumping around over the short term isn't really a surprise given the strength of that move. I think history can help a little when you sort of step back and zoom out what's likely to happen in the future. Not the past is 100% predictive of future performance, but the stronger that cyclical rotation into economically oriented sectors, the more likely it is to continue. And the reason behind that is it's more likely that when stocks have moved, as strange as it seems when earnings are actually currently contracting, stocks more often than not get it right and earnings do in fact recover, and then the risk reward for those cyclical sectors like technology actually is still positive.
Hey Denise, Cara kicked us off with, let's play a game of technology risk factor bingo, because she read everything out. So you had the IPO window, we had China most recently, the Fed, and then some economic data in the 24 hours that followed that said the Fed's going to stay the course. What's bingo for you? Like, what is the biggest factor that you're thinking about as it relates to tech?
Yeah, I think it all has to come back to earnings. And that's the biggest factor.
I didn't even have that one, sorry.
So that's my pick for bingo, earnings, not any of that. I mean, I think that the Fed, it's interesting when you think about interest rates, and I think people do think that they're very, very correlated to technology stocks. And it's not to say that they're not over short-term periods. We obviously saw that in 2022. But when you think about interest rates, it's a very shifting correlation because the why behind higher rates matters more than the level, meaning when rates are actually rising and growth is accelerating, then the technology sector and the stock market overall really has had little problem with higher rates. The problem comes in when you have higher rates and lower growth. Now that's where we were in 2022. So I think that you could be looking at a very changing correlation where rates and the Fed were the only variable that you cared about as an investor in inflation, to a situation where that might be more or less in the rearview mirror and earnings needs to be the focus. Because if earnings are going to recover, then interest rates and even valuations is much, much less predictive when you look at history.
What's so interesting is I'm interested in where you think earnings, aren't upon us till October the 13th. I was just looking at JP Morgan. They sort of tend to kick things off in the banking sector. We've got a couple of weeks to wait. We've just had a name big in your town, Klaviyo, come to the market, Boston born and bred and now publicly traded. It's now trading, at $32, $33 versus its pricing point. But where do we look for the investment opportunities within technology? Because it all seemed to be about AI at one point.
Yeah, I don't know as much as it was about AI. We certainly saw the move in the stocks. I mean, that is more of a forward earnings story. And for me, when I looked at the historical pattern, as much as people were talking about it being all about 5 stocks, really the historical pattern that we saw in technology is fairly typical when you actually see an earnings contraction and the stocks move before earnings growth does. And that's the trickiest part about looking at multiples or looking at valuation to see if whether or not that this move is done. Because more often than not, trough earnings is coincident with peak multiples, and that isn't a great predictive factor when you look at forward earnings. So the biggest moves that you have seen in the technology sector from a forward perspective, when you're saying net revisions be positive, is in semiconductors and software. So, and I think that that's the area of the market that investors would qualify as expensive. And the problem with that expensive is that it's usually not a problem historically, provided that earnings recover. Now, there is valuation support within technology, and that's more in the hardware sector. So it's a little bit of a across the board, the catalysts are slightly different. So for valuation support, you actually don't have really the earnings momentum that other areas have. But the places you have earnings momentum, you don't have valuation support, but that isn't necessarily negative.
A learning from the earnings window just gone, you think about Nvidia and Apple, what they had in common, 20% of sales coming from China. And they both kind of were talked about in the context of long-term risk, China, what's happening politically, but also technologically, right? Access to technology markets. What does your research there tell you about the risk in China?
Yeah, from a long-term perspective, I think that we've had a lot of risks in a lot of sectors over a lot of years. I mean, what you can see when you look back in the historical data for technology, and we've got data going back to 1962, is each cycle, margins have been higher and higher. Right, so this secular trend has been fairly consistent, which is not to say that there won't be risks in the market. And in some ways, I'm the wrong person to ask that question, because what I really focus on is not all the things that could go wrong and trying to discount that back to present or even future earnings, but really I concentrate around what is being discounted in the stock market. Because we've seen, and even over the last year, we've seen this tricky scenario where stocks can advance quite rapidly despite the fact that there is bad news. And that's the wall of worry, right? So when you think about risk from China, how do I as an investor know if that's a wall of worry issue or a real earnings hit? And I think in some ways, instead of sort of trying to figure out whether or not it is to think about what the stocks have discounted.
Let's go from the wall of worry and end on a happy note this Friday. Caroline talks about Klaviyo. I just wanted to ask you about Boston and for you to have the opportunity to give a shout out to the tech sector in Boston.
Yes, I will definitely give a shout out to the tech sector in Boston.
All right, well, that was short and sweet. We love it. Denise Chisholm, Fidelity Head of Strategy. Thank you, Caro.
Yeah, all eyes on what a global tech story. Meanwhile, let's just go over to what we've been seeing more close to home, Ed. Today, I cycled past the New York shop, of course, store, as you might call it in America, of Apple. And the new iPhones, they're on deck. The launch is there. Tim Cook was in town. It was busy. The queues were enormous. What does that signal about how the appetite for these particular new phones, iPhone 15 in particular? Meanwhile, look, let's have a quick look at the shares of Intel. Hey, Ed.
Yeah, this is interesting. We're down. Actually, no, we're now flat. Misspoke, but we're flat on Intel. We have been lower. They've been hit with a new fine, $400 million by the EU, who basically say that x86 CPU, they found them to have engaged in anti-competitive practices. You look earlier in the session, it did weigh on the stock, but now we are flat this Friday. This is Bloomberg Technology. All right, time for Talking Tech. And first up in the news, Kenio, the logistics arm of Alibaba, is planning to file for its Hong Kong IPO as soon as next week, that according to sources. This would make it among the first of the Chinese tech firm's units to go public. The company's targeting a raise of at least $1 billion in the share sale. And the Biden administration is limiting expansion in China by chip companies getting federal funds to build plants in the US. The announcement comes as the CHIPS Program Office is getting ready to give out $39 billion in grants grants and $75 billion in loans and loan guarantees. Plus, Amazon will run ads on its Prime Video service in key markets to help offset rising costs, following the example, of course, of other streaming platforms that are looking to further monetize their content. The company says ad-supporting streaming will be the default on Prime Video in the US, UK, Germany, and Canada starting early next year. Caroline.
Another one bites the dust. Meanwhile, look, the iPhone 15, those watches, they officially went on sale today in the latest test for resilient consumer demand here in the US and globally. It's all about Apple's devices. We're going to see how strong the start has been. Let's bring in Bloomberg's Mark Gurman. And Mark, I cycled on my way on my city bike past the one right by Central Park today, and the queues were enormous. That's typical though, right?
Yeah, we're actually seeing lines that are a bit longer than we did the last few years. Obviously, we had a few pandemic years, so that sort of sucked the wind out of, lines at Apple stores. But clearly and seemingly the lines are bigger than the past 2 years based on everything we're seeing from Mumbai to Sydney to Japan to Los Angeles. Clearly, there's a little bit more momentum here. I think some of the reason is maybe some of these people tried to pre-order online, but they were quickly met with delays into mid-November or even later in some regions, so they had no choice if they wanted one on day one to line up. But clearly, there is a strong amount of momentum, at least for the new Pro phones this year.
So here's the questions, right? The holiday season's key. So do you front load? Do you buy it now or do you wait? And then we call it iPhone 15, but there are 4 handsets to choose from. Do they go Pro, Pro Max, or base model?
Yeah, I think the Pro Max is actually especially important this year. Obviously, they removed the 128 gigabyte tier. That was the base tier for the phone in terms of storage. That was $1,100. Now they're starting at $1,200 by eliminating that tier and starting with a 256 gigabyte model. And that has additional functionality in addition to the bigger battery and the bigger display, this new 5x zoom on the camera for the telephoto lens. So I think you're going to see more people than typical upgrade to that biggest size for that extra camera improvement.
Mark, great to have your expertise on line lengths and everything else.
Yes.
We appreciate it, all things Apple. Meanwhile, coming up, look, it's one of Europe's largest cryptocurrency asset managers, CoinShares. It's looking to expand right here in America. We're going to be speaking with the CEO, Jean-Marie Magnetti. That's next. From New York, from San Francisco, LA, wherever you're buying your iPhones potentially on this day, this is Bloomberg Technology.
Welcome back to Bloomberg Technology. I'm Ed Ludlow here in New York City.
One last day. Meanwhile, I'm Caroline Hyde. Let's get a quick check on these markets on this Friday play day. We're seeing currently up a percentage point, Nasdaq 100, managing to get a little bit of risk appetite creeping in towards the weekend. Now, there are some catalysts, whether it be some slightly weaker economic data that means the Federal Reserve could potentially hold for the rest of the year. Look, many are betting on at least one more hike. But for now, we get over the Federal Reserve hump day and move towards actually a bit of buying in the 10-year yield. We, of course, have been at highs for years on out, but we're currently at 4.44, let's call it, on the 10-year. We're currently down by some 6 basis points. So a little bit of appetite having seen those yields push wider. I'm interested in the China story, though. CoinShares, that's a particular index that I'm looking at, up almost 4%. These are internet names in China that are traded over here in the United States, and they get a bid because actually maybe tensions are easing a little bit between US and China. There's going to be working groups, discussions, particularly at the Treasury level between the United States and China. Could that be easing some of the overall heated conversation we've been having of late? Move on to the individual movers. PDD doing well on the back of that. Meta Platforms, interesting buy note coming from Citi as we look ahead to Meta Connect next week. And I'm looking at Warner Brothers Discovery. Not a huge amount of news lines around Warner's today. We're down by some 3%, worst performer on the Nasdaq 100. Maybe we look towards whether those striking actions, particularly between writers, could be alleviated a little bit more on this day of discussions then.
Another favorite risk asset of choice of ours here on the program, of course, is Bitcoin. I just checked, It's still at almost 27,000 US dollars per token. One of Europe's largest cryptocurrency asset managers, CoinShares, is actually looking to expand here in America with the launch of a hedge fund division. Fortunately, with us on set to talk through it all, Jean-Marie Mognetti, CoinShares CEO. One would imagine that if you're launching a hedge fund here in the US, there is demand on the other side for such an offering.
Yeah, thank you for having me. We started our journey in Europe. We are, as you mentioned, Europe's largest asset management company in crypto. And, the US remains 90% of the AUM allocation in the world. So you have to get an offering in the US. We started our journey in Europe, and it's time for now to bridge into the US. And we didn't want to go into the US with our traditional ETF program or ETP program like we get in Europe and trying to find something different.
Yeah.
We've been trading, our DNA is asset management and hedge fund business. We were doing commodity business before that in a hedge fund style. So we say it's time to go back to our roots and offer the US market a hedge fund offering, especially when everybody is leaving the US. So what a better time to get in the US when everybody is exiting.
Okay, so you're taking a sort of controversial move because people are exiting because they're worried about regulation in particular, perhaps people building their businesses elsewhere. We're looking at Gary Gensler really talking tough against the industry. What are institutional clients, investors saying about this?
So I'm not sure if it's controversial or contrarian.
Contrarian, yes, that's better.
When we started our journey in 2013 in crypto, I guarantee you we were very contrarian and people were telling us, what are you doing? So it's kind of part of our, again, DNA to be doing this kind of move. We're not building the hedge fund business. The hedge funds are not based in the US. They are distributed and available for US investors, and that's very, very different. And our game is like, how do we bring this product and extend our product offering into the US? Our legacy product has never been distributed in the US, never been available to US investors. This is the very first time now that we can bring this product to market to a US audience, and there is an appetite for that in the US. There is a lack of product availability in the US. You obviously get the GBTC availability, but beyond that, there's a few little number of players. So bringing a bit of diversity and different view and different thinking is a great advantage.
Is it generally going to be exposure to Bitcoin and some of the clearly not expected to be deemed securities?
Yeah, so first of all, it's liquid. So everything we do is like 100% liquid. We don't do like 10 years VC fund in that approach. So it's like liquid investment, monthly redemption, monthly subscription. So very, very kind of easy to invest. And at the end of the day, you have to be able to follow as well market capitalization and liquidity. So we're going to really focus on Bitcoin, ETH, mainly, which are like kind of the big thematic we are seeing interest from.
The thing is, like, the fundamental question, whatever corner of the investing universe you're in, is what is the value of holding Bitcoin in a portfolio? From an asset allocation standpoint, or if you're a retail investor, what's your argument?
It's a very interesting point, because if you look at our start of our journey, we come into it as a deep value investor in CoinShare with our CoinShare eyes. So we started buying Bitcoin in 2013, seeing how it will transform and how a shock on the demand side will have an immediate effect on the price, because the offer is constrained by code, constrained by law. It's 21 million, nothing else. And for us, it was a very appealing process. I think that the narrative got lost a little bit in the meantime because of the speculation happening around crypto. And we can see now that the stats on-chain and also off-chain are showing that people are like starting to hold to their Bitcoin and not letting them go. There is a CoinShare research which came out this week where we can see that the amount of Bitcoin held on-chain for 1 year, not moving, 2 years, 3 years, 4 years, up to 5 years, are now at an all-time high. So people are starting to realize and go back to the real principle of Bitcoin. For instance, it was a reserve, kind of a reserve of value, a way of storing value for them for long term, and not kind of just like a trading asset. So it's a very interesting part of a portfolio allocation strategy. And in our CoinShare model, we want people to be able to come to us, say, okay, we want to allocate beta with you. And if you want to go beyond beta, you go to our hedge fund division and have either an overlay or a complete alpha strategy.
What was it like setting up the business here? I spoke to Chris Larsen 3 weeks ago, the Ripple co-founder, who, he is one of the biggest advocates for the underlying blockchain technology, has his own token. But he told me that basically the Fed, raw government, and the Fed and the Biden administration have killed the prospects through regulation in this country.
So, CoinShare have a presence in the US since 2017. We have a broker-dealer in the US since 2018. We have grown up this broker-dealer so they can distribute our product, which are effectively offshore products, so they are available for onshore investors. So the capacity to do it is very available in the US. It has to be done properly, done with the right people and in the right manner. And if you just go on this journey and accept to go on the journey and not say, we're just going to do it the way we want, then there is a kind of a clear roadmap you can follow.
Can you tell us, on your journey, you're out here marketing, I'm sure.
I'm not marketing.
You're out here having discussions about the offering that you're going to be attracting investors towards.
Of course.
And therefore, who are you speaking to?
I think the people who are interested in this kind of offering, nothing we're doing here is for retail. It's all accredited investors, qualified buyer, and more sophisticated investors. And you can see like an interest going from, RIA at the bottom of the stack up to very sophisticated asset management company who are looking for sleeve of diversification, because it's not very easy when you are a multi-billion-dollar hedge fund to just create a pocket of liquidity just for that. So it's like, how do I find the right partner to be able to grow and allocate?
Jean-Marie, great to have some time with you on your journeys across America. I have a feeling you'll be back a few more times. Jean-Marie Wagnetti is CoinShares CEO. Meanwhile, we did have a little bit of breaking news, and we just want to get you ahead of what's happening next week. We understand that, well, the FTC is poised to sue Amazon for antitrust violations as soon as next week. There had been a report by Politico this could come as soon as Tuesday, to keep a close eye on, of course, the ongoing regulatory environment with which some of these big tech companies find themselves within.
Yeah, and I think Bloomberg's now reporting that the FTC is going to do this next week. And remember, this is going after the online retail part of the business, the most sort of consumer-facing bit. And our colleague Leah Nyland, I think she reported in the first week of September. So we thought this would come, but yeah.
Specifics.
Right, coming up here on Bloomberg Technology, we're going to talk about the future of climate tech and how AI can impact that sector, its potential, but also possible drawbacks. Ananda Impact Ventures' Zoe Pedden joins us next. This is Bloomberg Technology.
You need to have a dialogue with countries like China. They're not going to go away. And there may be things that we can work together with China on. But, we have to be very realistic, and we have to have those discussions with our eyes open. What we're trying to see is if we can get a global consensus on how to make sure that artificial intelligence remains a massive force for good in the world, which I truly believe it can be.
That was UK Chancellor of the Exchequer, Jeremy Hunt there. And as world leaders gathered at the UN General Assembly in New York City this week, everyone seemed to agree on one thing. Climate change is among the biggest problems facing the planet. Maybe that's where AI could be a force for good. On today's VC Spotlight, we're taking a look at climate tech investing, the impact of AI on that sector, and much more with Ananda Impact Ventures, a European VC firm with $213 million under management. And they're investing in startups with scalable missions for the planet's future. Let's bring in Ananda partner Zoe Pedden for more. And, Zoe, these meetings, these big, high-profile, week-long, let's talk about the world kind of events, as somebody invests in the early stage, do you see a trickle-down of benefit from something like that?
I think it's good to put the topic on the world stage. The media, like yourself, are picking it up and talking about it, and it really helps the startups who are already working in it to get some momentum and get people talking about certain sectors that perhaps haven't received such media, media exposure. There's been a lot of focus on carbon and carbon accounting, but what about biodiversity? What about nature? This is being put on the, on the radar now. So I think it's important that we do have these meetings at this global stage.
What's interesting is we just heard from Jeremy Hunt. Meanwhile, his leader, the Prime Minister of the UK, is getting a lot of heat for basically putting climate goals to one side. And I'm interested in your perspective of the politicization of the space in which you work. I mean, certainly that's here in the United States as well. Has there been as much interest in backing funds that want to invest in climate startups?
I mean, I was looking at PitchBook the other day, and it reported that in Q1 2023, climate tech startups raised $5.7 billion. So 279 VC deals, which is a 36% decline in deal value and 31% decline in deal count from the previous quarter. But that's a lag indicator for me, because when I'm out there and I see when we're raising, our fund, and I meet people who want to invest in Ananda, I don't see this hesitation. I just see more and more money coming from many different areas coming into climate. So I think the dip in climate investing of that last quarter is just a general reflection of the dip in VC funding overall and not an indicator of where things are going.
So let's talk about how you stand out from the crowd. At one point, it felt like a very busy crowd. But what's interesting about Ananda is you sort of put your money where your mouth is and you don't take fees unless, well, the companies which you're backing are saying what they're going to do. And you're holding yourself to some sort of transparency account here. Is that something that's being copied by the rest of the industry?
It's increasingly being copied, and we wanted that. It's called our impact carry model. We created it back in 2014 alongside the European Investment Fund. So it's a co-creation where the carry is linked to the impact. So we have impact KPIs, and we need to meet at least 60% of those targets from those predictions from those startups to be able to see any carry at all. So it means you really values align, and the founders really like it. And of course, our investors do. I think it's really important that we have something like this around accountability and governance in impact investing to stop impact washing, which, you know, you've got greenwashing, you've also got impact washing.
Zoe, what is the AI climate play for a venture capitalist like you?
Oh, there's lots of different things. I think the biggest area is in machine learning. That's what we've seen for the last few years. So going from looking at computer vision that's tracking has thermal cameras with nanosatellites, being able to detect and look at prevention of wildfire, massive area, and then down to being able to predict in wastewater. Wastewater surveillance is a big new area in climate tech, and pathogens. So being able to start to track different pathogens like the COVID virus, which is viral, but actual bacterial ones, and being able to predict which areas might not respond to antibiotics. So antibiotic resistance is massive. So that's when you start to see the environment cross over into population health. And then regenerative ag. What else? Lots of things going on in ocean tech. Very difficult area at the moment. And biodiversity, nature, as I was referring to before. A wonderful, wonderful new area, much more tangible to talk about than carbon. And I think there's a lot we can do around being able to track nature using environmental DNA on the ground and being able to predict and what species have been removed either through infrastructure or mining or something in the water, anything that's being dug up, and replacing that and making it better than it was before, because those little microbes, so it's not the big species that you think about, big animals, it's actually the microbes in the water. They leave trails of pieces of DNA, and we can detect all of those. And they're the ones that when you talk about our food and our soil systems, they're absolutely essential for the balance that we have in nature, and those are the ones that are suffering.
And Under Impact Ventures partner Zoe Pedden, thanks for spending some time with us, really talking us through some of the opportunities there. Meanwhile, we're going to focus on climate impact a little bit more, with some hundreds of millions being spelt in that particular direction. Eldridge, Brightstar and the Clary Group have signed an agreement to acquire a majority stake in Osenko. Now, it's a global provider of engineering consulting services to the minerals, the metals industries, and indeed to energy transition, such as designing efficient mines, metal extraction facilities, or delivering sustainable mine waste or water management. Basically, this is a billionaire, of course, Todd Boehly getting involved. He is known for Major League Baseball investments, and among others, and of course, Marcelo Clary partnering up. Meanwhile, coming up, we're going to be continuing the conversation on sustainability. Global Citizen's going to be in the house. There's a music festival here in New York.
It's like Live Aid in the social media era.
Yeah.
Is that fair?
True. And how are they using social media? This is Bloomberg Technology. So it's the Global Citizen Festival. It's become the world's longest-running global campaign calling for an end to extreme poverty ever since its first installment here in New York City in 2012. Now, for this iteration, 3 million actions have been taken by global citizens via its app to ask global leaders to defend the planet, to defeat poverty, to fight for equity. Now, as we gear up for 2023 Global Citizen Festival taking place tomorrow, let's bring in Michael Sheldrick. He's Chief Policy Impact and Government Relations Officer over at Global Citizen. And we're going to put the weather to one side because it might be a little drizzly. But ultimately, you're fighting because of weather elements, because of the climate, because of poverty. And what's so interesting about Global Citizen, you were born in an iteration where people used to perhaps tweet, or they'd write letters, or they'd send emails. How have you used social media to now bring your force to bear?
Well, thank you for having me on. And the first thing I will just say, if anyone's coming tomorrow, the Global Citizen Festival continues, rain, shine, hail, doesn't matter, everyone will be there. And you're absolutely right, around the world, extreme weather events are impacting the most vulnerable communities. But the way to think about the Global Citizen platform is, yes, people know us for our festivals, but inherently we're a digital platform. And we campaign 365 days a year. People engage with our content, and we're always finding ways, novel ways to meet people where they're at. So we're on TikTok, we're on Instagram, we're finding ways to engage people who may not even have access to Wi-Fi in developing countries as well. And what we're seeing is record levels of engagement. Even as social media becomes more fragmented, we're actually seeing our citizens looking for a way to express their agency, to take action, such as calling on the UK government to follow through on its commitments around climate financing.
So where does Rishi Sunak, who at the moment perhaps is getting a lot of criticism for not really focusing on the climate agenda, how do you tackle him? Where are your citizens going to? How do you present your case to Rishi that he should care?
So we have Global Citizens in every single constituency across the United Kingdom, for instance. And what we see, and this is mirrored around the world, is 2/3 of people around the world are saying that they favor clean power, particularly solar energy, over fossil fuels, right? So we're actually seeing, if you look at where people are at, it's an entirely centrist message. And we believe that the UK government, especially with the Prime Minister's remarks over the last few days, is on the wrong side of history. And Global Citizens have been calling them out. They've been contacting their local member of parliament. And we're also calling on the Labour opposition, Sir Keir Starmer, if he's elected Prime Minister, to stand up and not backtrack, because you need Britain. Britain has been a leader on climate change. And through our digital platform, it's a way for citizens not just to whine and complain about these issues.
We're good at that online.
Yeah. I know. But we can take action. We can actually do something. And the data shows when you do something, that also gives us hope as well.
You know, Michael, in the last segment, I was saying this is like Live Aid, but in the social media era. We talk so much on the show, Carrie, don't we, about the health of social media platforms right now, knowing that what stands out is authentic, legitimate. Yeah. You know, how do you feel about that? Do you feel that you are able to get a direct message out through the content that you're sharing?
So Live Aid, Bono, Bob Geldof, we always say we stand on the shoulders of giants, but our evolution, we see action as our currency. So rather than selling tickets, you know, we could make a few $1 million, or we can give people a way to take action. And people can take action on our platform, and in taking action, they accrue points. And as we'll see tomorrow at the Global Citizen Festival, they can exchange those points for awards like tickets as well. But we see people, they like to be rewarded for their action taken, but they also like to, they also like to engage throughout the year as well. So
obviously you employ, well, you don't employ, but you stand on the shoulders of celebrities to get your message across. How do you navigate the politicization of these social media outlets? How do you decide, oh, we're going to remain on Twitter now X, even though there seems to be a blow-up around now who owns it, or indeed the direction of travel of TikTok?
So I think, you know, a really interesting example is Jungkook, right, of BTS fame. You know, they're citizens, and you can see the engagement going on. To be honest, they don't really care which platform. I think what you see, whether it's on Instagram or you see it on Twitter, you see record numbers of engagement in the issues. And when Jungkook shares something about the issues on all of his platforms, you see people not just engaging with their content, but also coming back to the platform to take action. And I think for them, it's not about being political, it's not about being left or right. Often the sentiment is around the issues. And I think what they see is they trust many of these influencers, they trust these artists. And so I think what they're seeing is the artists being trustful custodians of the message.
Michael Sheldrick bringing your message today. We thank you, Chief Policy Impact and Government Relations Officer at Global Citizen. Keep an eye on that rainfall. But it happens rain or shine, apparently. Now that does it for this edition of Bloomberg Technology. And Ed, I can't get my words out because you're about to leave.
I know. I'm going to go back to San Francisco, but it's been good to be in New York. Recap the show. We love that you guys are listening to the podcast. Apple, Spotify, iHeart, wherever you get your podcast. Long week in New York City. What a week to be in New York City.
Oh, the listings, the pops, the fact that we're going to be analysing how that continues to evolve next week. From New York,
this is Bloomberg Technology. Ooh.